So Sam, with the new tax law, there's some changes with charitable giving, and it still makes sense to be generous. But let's talk about what those changes are.
That's right. Charitable giving can create deductions on your tax bill. And there are really two ways that you can file those deductions. There's a standard deduction, which is right now, currently, if you're married filing jointly, it's about $30,000. If you're filing single, it's about $15,000. And in the past, before this new bill, if you are a standard deductor, any cash charitable gifts would not be counted as additional deductions. Now, for single filers, it's $1,000 that you can deduct additionally, and for married filing jointly, you can do a $2,000 additional deduction. Let's talk about itemized deductors. You'd be in this camp if your deductions are greater than what the standard deduction is. So with this new legislation, there's kind of a hurdle. So the first 0.5% of your AGI now cannot be counted towards deduction. So just to put numbers behind it, if you make $100,000 a year, the first $500 of charitable gifts would not be counted.
Right.
So that's a bit of a change too.
Yeah. So one way to get around that would be through giving from your IRA or qualified charitable distribution, so QCDs. And it becomes even more helpful to do it that way. So this would be deciding that you want to give when you're over 70.5 from your IRA account to whatever charities are important. The maximum is $108,000 per person per year, so there's a lot of space there. This works really well for both standard deduction people and itemized deduction people. So in either case, QCDs or giving from your IRA make a ton of sense. One thing that I really love about it is it reduces your taxable income, your AGI, adjusted gross income. So it might reduce what people pay for their Medicare premiums, could impact what you pay for your Social Security in tax, so it could potentially lower that. This is a great way to lower taxable income for people who are over 70.5. So another group of people that's impacted by the changes in the new tax legislation would be high income earners. Yep. So if you're in the 37% tax bracket, now you're able to, instead of writing off based on the 37% tax bracket, you can write off on the 35% tax bracket. So still really helpful, not quite as much impact, and they still would also have the 0.5% amount that is taken away. So in other words, if you give 10% of your income, for instance, 9.5% is the amount that could be itemized.
That's right. And with these changes, it's still good to keep in mind that there are some smart tax strategies and smart charitable giving strategies that you can still use. For example, if you are in that range with your itemized deductions that are close to the standard deduction, you might want to consider doing bunching your donations.
Yep.
Now, what you do here is maybe in the first year, you might want to give for 2 years. So you might give in January, in December, or along the way that way. So then that year you could do an itemized deduction because you've given more. Then the year after that, you can scale your giving back, and then utilize that standard deduction. There's also the use of donor-advised funds. These are really powerful in high-income years. You can give a large portion, and you can deduct all of that at once, and then it goes into an account. That account can grow for you, and you can give out of that account for the future, really, as long as you want to.
Yep.
So when you give out of it, you don't get deductions there, but you get that front-end deduction, which can be really powerful. And lastly, something to think about, if you have a non-retirement account and you have appreciated securities, maybe you bought a security that's grown a lot through the years, if you sell that for your own use, you're going to pay capital gains on it.
Right.
If you decide to donate that to a charity, tax-free.
Yeah, so those are things you can still do under the new legislation, which are great. And I think a big takeaway is don't just write the check to the charity, give it some thought. There might be some ways to do that in a more tax-friendly way. It still makes sense to be generous. We love helping people think this stuff through, and so we can help our clients with their causes and things that matter to them.